Hey everyone, so I'm just going to do a bit of a longer video as promised on the Lifetime ISA account. So if you're a UK taxpayer, this is a really good one. The headline figure is 25% interest, and that's the government bonus. And then you get maybe 4% account interest on top. Or if you go down the route of something like a stocks and shares Lifetime ISA. You can also, the market generally goes up by, historically around 8% or something like that. So, you can look at even higher percentages. What I would say is with a lot of the managed stocks and shares Lifetime ISAs, you will pay maybe 1% of, the amount in fees. So over the long term, it's maybe good, but if you were planning to buy a house in, say, a year or two, it would maybe not be the direction I'd go down. Just to go back to the headline figures, so it's 25% interest on whatever you put in. Up to £4,000 is the amount you can put in per calendar year, so it resets for you every calendar year. So if you put 4,000 in, you'd get £1,000 back as the bonus. If you've got just a regular interest account, you maybe get £200 on top of that back. So that's, £1,200 for free. And it's non-taxable because it's all on that tax wrapper of an ISA individual savings account. This £4,000, for example, if you put in, does count towards your £20,000 ISA total that you can put in a year. All the interest is tax-free. And that goes the same with a stocks and shares ISA. So, if you get, for example, 10% of your amount back in a good year, that would also be tax-free. So that's, quite an advantage considering, the UK tax threshold for interest and things. For a normal rate taxpayer, I think it's £1,000. So if you've got relatively high amounts in savings, especially at 4%, 5%, that's going to add up quite quickly. And if you were getting something like 10% in the usual account, then you'd get there quite quickly, really, if you got a lot in savings. So there are obviously some criteria, as there would be in any scheme. So you've got to be a UK taxpayer. You've got to be between 18 and 39 to set up the accounts. And effectively, one of the key things about this account is you can use it for house buying, or you can keep it for retirement. So to get it for retirement, you've got to be 60 and over. Less than retirement age, but you can pay in it, I think, until you're 50, and you'll keep getting the bonus. So like most accounts, the sooner you start paying in, the better. So if you're 18 and could start even putting small amounts in here, saving towards the house/pension, that'd be really good. In terms of the pension, you can't. The only exception to having it as the pension or using it for a house would be if you're terminally ill with less than 12 months to live. You can withdraw it without any fees. Otherwise, it's the pension, and 25% bonus every year guaranteed, plus whatever the general Bank of England type interest tends to be on top of that, or whatever the market tends to be if you're going for a stocks and shares ISA. I think that's pretty impressive. If you know of any kind of general accounts that can give you that kind of tax-free interest, then feel free to put some in the comments. But I think it's a really robust account, and it's a lot of the provider. There's a few providers, and a lot of them are FCA approved. So you'd get that FSCS compensation up to 75,000. If the banks went out of business, bust, etc. So I suppose the main use of this account for many people might be the house buying aspect. So, if you put in money towards buying a house, the house has to be below £450,000. So, for most people, that's fine. Obviously, if you're trying to get a higher end house, then I suppose it might not be for you. another addition to this is you can combine it if you and your partner are both first-time home buyers. You can both have a lifetime ISA, and you can both, set one up each, pay into it separately, and then if you're buying the house together, you can both use, the initial amount as well as obviously the bonus, and you'd get 25% bonus each from the government. So if you both save for 2 years, put £4,000 in each a year, you'd have £10,000 each plus whatever the interest happens to be, or whatever the markets tend to give you in that couple of year period. So you could have another £400 each on top of that. So instead of having just say 16,000 total towards the house, you'd be getting the 4,000 bonus on top of that, so that's 20,000, and then say if you get £800,000 in interest on top of that as well, maybe more, maybe less, you're talking 21,000 or something instead of your 16. So your buying power is just that much more, and then hopefully that saves you on rent and things in the long run. There are a few other criteria with the lifetime ISAs. You've got to be within the age limit. You've got to be first-time house buyers, as I've mentioned, and you've got to use a solicitor or conveyancer. So you can't. Another thing is, I suppose, you can't buy a house for letting purposes. You are supposed to live in the house that you buy. And you've got to buy it with a mortgage, so you can't just buy the house outright, which I think is, a bit unrealistic for most people in most areas. But yeah, so that's kind of the basics. And I think too, even if you buy a house using your lifetime ISA, you can keep it open by leaving, £1 or more in there. And what that lets you do is it means, for example, if you start the account when you're 20, you buy a house when you're 30, you've got 10 years of the bonus there. If you then want to save until you're 50, so another 20 years of, the 25% bonus of whatever you put in, up to £4,000 max, you could use that then towards your retirement. And then if you're, unlucky and, terminally in between, you could also use it as kind of a source of income there. I, really hope no one ever has to do that. But yeah, hopefully that you find that quite helpful. The only thing I would say is, it's maybe not the most flexible account to take money out of if you're, going to take money account for the purposes which aren't buying your first house, retirement, or being terminally ill, retirement at 60 or being terminally ill. With the terminally ill, you've got to be less than 12 months to live as well. So it's really quite strict criteria, I suppose. So yes, you'd only want to put money here that you are fairly sure that you don't need for other purposes. So it shouldn't be a rainy day fund really, and it shouldn't be a general savings account. It should be saved for the purpose of buying a house, retirement, or if you want it as like a contingency money, if there's you're cautious of being getting ill at some point, you could have it in there, but even for that, it's maybe not the primary goal of the account. What I would say is, yes, so if you, for example, put £800 in the account, the government will top it up by £200, so you've got £1,000 in there. But then if you take it out for a reason that's not house buying, retirement, or being terminally ill, they'll charge you 25%, withdrawal fee. So, you'd pay £250 of your £1,000 to withdraw it. So you would have put in, £800 and you'd only actually get £750 back. So that's something to just keep an eye on. If you think that you might need the money, then maybe you split it between this and a different savings account that does not have any penalties. ISAs in general are still very good. Cash ISAs, you're probably only going to get a few percent, but at least it's tax free. So yeah, that's what I would say about the withdrawal fees. But in otherwise, I've had this account for years, and it's quite good to see it kind of clock up. Every year get a few £100 in bonus or whatever it ends up being. So yeah, I'd recommend it if you plan to buy a house. Yeah, I hope you found this video helpful. Hopefully it's not too long, because I know I've done a lot of shorter ones, but I just thought it gives you a bit more of a background. There are a bunch of people who do this type of account, in the UK, at least a handful, half dozen. If I can do a referral, I'll put one in the comments. And then I know with one of the accounts, you would get 6-month free account management fees, so to help you out a little bit. So I'll see if I can put that in there, and if I can add some graphics, I'll do that too. Yeah, hope you've enjoyed the video. Please like and subscribe. Thank you now.